Everybody, welcome to the Baguette Investor Show for a new video. Every single week I review my performance, my trading account valuations, and I review the charts and what kind of stocks and assets I'm looking at. So if you like these videos, please mind leaving a like on one of them or sharing them. I don't know, maybe somebody else would be interested. First, we start by my account valuation. You see my profits, my performance in percent, and my account valuation. If it's red, I'm losing money this week. If it's green, I'm making money this week. You can see the previous week has canceled previous week of profits, so I'm neutral in terms of profits since 1, 2, 3, 4, 5, 6, 7 weeks right now, which the markets are always very, very hard during this period. I think you've seen it too. So it's really a range, but right now we're starting to see very strong signs of the market telling you to be cautious. So we're going to review that. First thing I like to show you is the federal funds, which is the thing you should be looking at right now. Well, what matters is more the anticipation than the actual Fed fund itself. What that matters is that the interest rates of the central bank of the United States of America, which is basically the thing that will tell if the world is going to enter a strong or a light recession due to inflation. They are currently wondering if they should hike the rates to a very high number and kill the inflation by make a massive recession happen, or do something else. So this is something you should really take a look at. And if the rates skyrocket massively, they will cause strong recession, and the anticipation of that will lead to people getting rid of all their assets. So stocks prices will drop very strong. You could see that the more people start to fear inflation and the reaction of the central banks all over the world, the more pressure is applied to the stock market. We have seen a massive surge in stock prices, especially growth stocks back in the days where money was cheap. And as money gets more and more expensive, we're starting to see a very toppy pattern. Of course, we're still in a very choppy market, but that could happen very quickly. And the kind of candles we're having right now is telling you why would you be aggressively bullish right there. Like, I hope you are the same as me, paying attention to your money management, having a very light, very polite, very, slightly aggressive when you need to be aggressive, but it's better to be very, very defensive in those times. What does being defensive in your money management mean? It means having low position, small risk per trade. What does that mean? If you on your trades risk 1% in normal markets, right now you'll be risking 1.2, 1.3, 1.5%. I risk 1.25 or 1.5 depending on the configuration and the market. And that is just it. I will never risk more on a market that has no odds for me to make the most of it. Like when you have very strong market like this, when the market is very, very good, you have a clear sign of investors all agreeing on one direction to the trade. Of course, there are some throwbacks, but the overall trend is very strong. And right now we're on the complete opposite of that. People don't know where to go. They're expecting the decision to be made about what people do about inflation right now. And we're starting to see more and more pressure applied to the downside. So I really believe that we're going to have a strong drop on the downside. But right now, there is no clear view. This is the S&P 500. It's almost the same for many other stocks. You could see Canada gave us almost of a breakout and now canceled everything with very high conviction of not willing to buy the breakout. Investors did not buy the stocks that were right there. They sold onto them because they fear inflation reaction. And that means Canada remains in a very, very boring range, the same as it was since November 21. What about Australia? Australia is the same. It's stock markets that I've been looking at because they are very commodity related. And if you want to be invested into the worst place right now, you could just invest into the NASDAQ and be invested into the weakest equity right now, because the fundamental view of this, we never pay really attention to fundamentals, but the fundamental explanation according to me right now is that the higher the rates, the lower the companies that are growth oriented will be valued. Very simple. If you look at commodities, we're still very high, but it might be the time that if investors anticipate a global recession, they're going to cut on their commodities positions. There are different asset classes of commodities. There are energy that I was paying attention to. The breakout right there, you can see that it's the same thing, it's fading down, and you can see agricultural commodities that are doing the same thing. Remember, commodities going down is pretty much good because it means inflation will go down, but it also means that there are going to be less demand for commodities, which means recession. So if commodity prices go down, it means economic activity is anticipated to get lower. And same thing, I really strongly believe that gold can be a really good trade right now, but if we close, I already mentioned it a few times, but if we close back below the support, I will close all my positions on gold. You can see the rise in interest rates in the midterm interest rates, the 10-year yield of the United States of America reaching 3%, which is something you have never seen since December 18, which is quite old right now. And because many people now consider crypto like a risky asset related to growth, we had a fake breakout right there, and now I'm really believing that we might end up lower. And if we break this big support area right there, very, what would you say? Not very precise, but I think that if we break this kind of area right there, this is going to get very dirty. And as for the other assets, there is no reason to go hard right now. Pay attention, watch the markets, and go hard when it's time to go hard, and don't do anything when it's time to do anything. I saw a tweet, a guy telling you could stay in cash and lose 8% due to inflation, or you could lose 80% by being stupid in the stock market, and that's exactly what I believe. Other thing that you need to be looking at is how your currency is acting according to the dollar, because if the Federal Reserve hikes the rates, all the money is going to flow into the dollar currency because people want to deposit their money into bank accounts that will hedge themselves against inflation. And that means that currency you're holding, don't know which currency zone. I live in the Eurozone right now. Maybe we're getting out of there soon, I don't know. But you could see that we are breaking out. I'm going to give you the other chart with the much more obvious. There you go. You could see, sorry for me yawning, a little tired. You could see that we are right now in a very important phase. And I believe that if we see the Federal Reserve fighting inflation and that the Central Bank of Europe can't, there is going to be massive devaluation of the euro. Could be 20, could be 10. Could be 30%, I don't know, but very risky to hold euros at the moment because there is a risk of devaluation and the risk of the Eurozone blowing up. So no time to trade right now. I do not recommend anything. I don't see any reason to trade anything right now. If you look at respective sectors, they all look bad because they all look that profits were taken heavily. This is mining. Look at copper. No, this is metals and mining, and copper miners are right there. Look at how copper miners were getting destroyed. I don't know how copper price is doing. Gonna check this right away. No, not I want. There you go. Yeah, so copper might fail on this level. As you can see, this resistance level is very important. So yeah, pay attention to commodity prices. That will tell you about the level of anticipated economic activity, and pay attention to the Federal Reserve, what it's doing, because it's really what the Federal Reserve does that will drive which side the markets go. Thank you for watching. See you in the next video, and goodbye.